Alrighty, I am ready. Good evening, afternoon, early evening. Um, so I've been thinking about I've been working with consultants and thinking about now on their financial, strategy and what are some of the mistakes that I see consultants making. So I want to make sure that you're able to avoid these mistakes and also, find hidden cash in your business and keep more of the money that you're making. So when we talk about, financial strategy, mistakes, and so forth, financial strategy can include, a lot of things. It can include from things like investments. It can include, tax strategies, cash flow management. It includes a whole, hi, Madeline, how are you? It includes a whole breadth of things. So what I want to focus on today is more of, long-term financial strategy. Now that you're a consultant and you start making a lot of money, you're acquiring a lot of clients, you're having fun in your business and you're growing. So one of the first one is the quite obvious. The quite obvious is not having one. That's the number one. That's the quite obvious one, and not having a financial strategy. So the problem that may occur is because they probably don't have the right information, for one, and for two, just not having a long-term plan, not looking forward, not looking into the future. You're making a lot of money for a few years, and then all of a sudden things start drying up. And then what happens when things start drying up? You may have to change business or start doing something else. It may be because of some kind of market change or something like that, whatever the reason is. And don't get me wrong, there's no issue with starting over. There's no issue with doing things differently. There's no issue getting a new niche or something. But a lot of times, what's the reason for you doing it, and what have you gotten from the last, business experience that you've had for the past, 2, 3, 4, 5 years? Are you able to take something from that, from a financial perspective, to move it into the new business or whatever you're doing, so that you can continue to have cash flow in your life, and that you're not always starting from rock bottom every time. So what you want to avoid here, if you don't have any sort of financial strategy in place, Carrie Ann, what's up? If you don't have any sort of financial strategy in place, is, are you starting from rock bottom every time? And what are some of the reasons? Because you're just completely ignoring your long-term, financial plan, or is it just, life situation that happens that puts you in that situation? Regardless of if you take a look at it to see how you can make a change in your new venture or the thing that you're about to start over with. The next one is, and this is a big one, so for the people who do have a plan in place and start doing something, is they're deferring too much of their income. So the only thing that they're having and the only tax strategy that they're using is deferring income. And I'm talking about putting a lot of money in IRA, 401k, and those type of plans that basically you don't pay tax now and you pay tax in the future. There's nothing wrong if you want to be able to invest in those type of plans, but is that the only way that is that the only strategy that you're using? If it's the only strategy that you're using, here's the problem that you're going to face when you're getting ready to exit or something like that. The number one thing, it's not tax-free. So you're not paying tax now, and probably now is a point in your life that you can find so many deductions and so many more ways to reduce your tax rate. And you're pushing it in a period of time that you may not have as many deductions, that you may not have as many write-off, so you may be paying at a higher rate. So if all of your money or all of your financial strategy that you're planning to implement later on in your life, if those are only in tax deferred plan, then you're pretty much you're pretty much choosing the wrong plans, basically screwing yourself over in the future because you may be paying at a much higher rate. So what's the cost of that, and is that the most efficient use of your hard-earned cash today? So I mentioned that, you know, those are not tax-free, and that you're pushing it into the future, which means that you may be paying more. Because if you think about it, at that time, you know, sometimes people have kids that they've already grown. Some people, they may, you know, pay off their home, or, you know, they may downsize to a smaller home or something like that, that they really don't, you know, they don't need that, you know, deduction from, you know, mortgage, property tax, and so forth. So you may just not have, and you see this happens to a lot of people who are retired, that they just don't have a lot of deductions. They just don't. And, you know, they're paying, you know, at a higher tax rate. So what you want to look at is to make sure that if you're investing in these, if your plan as a consultant is to defer everything, to take a look at your exit strategy. How are you going to exit this plan? And what I mean by your exit strategy is that you start putting all your money in, you know, IRAs, 401ks, and so forth. In the future, how do you plan to exit it? How do you plan to get out of it without triggering a lot of penalties, and also without triggering a lot of taxes now that you don't have a lot of deductions to offset it? So what I would recommend is to have a combined strategy. Have income that you're deferring, and income that and investments that you're not deferring the income, because that time when you're ready to pull money out, you can balance the effect of taxes. You can balance it at that time if all your eggs are not only in the tax deferred basket. Because remember, it's not tax free, it's tax deferred. And that's something I have to always remind, you know, consultants and business owner of, is the difference between tax free and tax deferred. They're two completely different things. So if all your eggs are in the tax deferred basket, start seeing now, because now if you're still working in your business, now is the opportunity to generate more cash flow. Now is the opportunity that you can start making other investments that that you can balance in the future, so that you're able to lower your tax rate then. Because it doesn't make sense you lower your tax rate now and pay at a higher rate later. It doesn't really make any sense. You know, the value of money and all that stuff, when it comes by, then it may not be the best use of your money. The last thing is in investments, like people that are utilizing investments. How are you using investments that will reduce your tax rate? Your business is a great vehicle for you to start. Once you start having additional cash flow, to make additional investments. So these are the investments that will reduce tax rate now, and once you're ready to utilize that asset in the future, it will also reduce your tax rate in the future. So take, for example, one of my clients, Eric, he loves real estate, and that's just his thing. So we came up with a cash flow model to show him how, you're a consultant, you're working in your business, and how can you generate, passive income that's taxed at a passive income rate, not passive income as what they talk about online, but passive income according to the IRS, which is mostly investment income, so that he was able to see how he's not going to pay any taxes on that money now, even though he's earning more money. He's cash flow positive, and he's also, able to utilize the gains from those properties that he's invested in. And he also have his tax deferred 401k, not 401k, what's it called? IRA plans that he's planning to use. So he's starting to do a combined strategy where he's able to balance both effects. And, for everyone, your investment appetite is completely different. Some people like different things, but what I would say that it must match with your purpose and your value and things that you're willing to learn about. you don't want to go invest anything into anything that you don't really care about. You don't want to invest anything money into anything that you know little about, because that's basically, that's basically gambling. So you want to make sure that you're investing in something that aligns with your long-term goals for yourself and for your business. You want to invest in something that is aligned with your passion or your purpose. You want to invest in things that's basically that you are able to be comfortable learning about it. Because if you don't know much about it, then pretty much you're going to be gambling and leaving all that up to someone else to determine. And you can also check with Warren Buffett, because he also recommends learning about what you're investing in. So, so this is not only coming from me, okay? So those are the three things that I mentioned that I see consultants are not, the mistakes that they're making in their long-term financial strategy is: one, not having one; two, just defer. Their only strategy is deferring income only, using IRAs and 401ks. That's the only thing that they use as a tax strategy or as a financial plan in the future. And also, not making the appropriate investments that will continue to reduce your tax rate now and in the future. So if you like this information and you want to hear more information like this is just a sneak peek of what my new 4-week program offers, launching on September 4th. And it's just only 4 weeks to get you a really solid financial strategy. So if you're a consultant and you like this, and you want to avoid making these money mistakes, both from a financial, tax, and cash management perspective, if you want to find hidden cash in your business and your personal life, and also keep more of the money that you're making, then send me a message. I'll be happy to answer any questions that you have. And then we can talk and see if you're a good fit for the program. But anyways, send me a message and we will continue this conversation. If no more questions, then I will just get off for today, and I'll see you soon. Talk to you soon.